What's going on, guys? Got Mander and Diamond here. We're going to do the long-awaited Fibonacci retracement video for you guys. We're going to go through kind of the backbone of what makes them, how they're calculated, kind of where those levels come from, and then obviously how to draw them, how we would personally look at them. They kind of work on a bunch of different time frames. It kind of depends on what style trader you are. Obviously, if you're a scalp trader going for smaller moves, you might use them on a smaller time frame. Me and Diamond like to use them for more of like a macro level move, kind of over a couple weeks or a month, if you have a strong trend in either direction. So we'll go over all that with you, and obviously show you how to draw them and how we actually place them on the chart. So a couple disclaimers here before we kind of get into the meat and bones. I do want to lead off and say I know Fibonacci retracements are kind of a taboo topic. It's kind of like either the trader loves them or they think they're complete garbage and fugazi and don't work. So take everything with a grain of salt, right? There is really no scientific reason as to why these work. So if you plot them, if they work for me, they work for Diamond. We've been using them for years. We love them. But again, we can't really explain to you why they work besides the fact that there's like algorithmic trading and AI that use them. So kind of take that with a grain of salt. Second thing being they are stochastic. So they aren't going to predict future events. So like, the markets are news driven. And if we have a news headline, your Fibonacci level isn't going to work as support if we have a bearish headline come out. They kind of work intraday trading or no news, right? They're going to act as common support resistance levels. But if you have news break, that's going to drive the market in either direction. Don't expect it to reverse at your fib level.
Exactly. The only thing I want to add there is that, when you're trading Fibonacci levels, I think that you have to use them as, more levels of support and resistance as opposed to, all right, I see this line at this price. And so once it gets to my fib level, I'm just going to buy calls or puts in the opposite direction of the trend, expecting it to reverse, right? You want to use Fibonacci retracements just like you would use anything else. You want to add levels of conviction using your EMAs, using different key price levels, using options flow, right? You want to stack these levels of conviction on top of each other so that you can take an A+ trade as opposed to just seeing, a line that you drew on the chart and saying, all right, I'm going to get long or short here because this line says that I should. And so just keep that in mind. You want to always, try and compound as many levels of conviction as possible. And today we're just going to go for Fibonacci retracement levels as another level of conviction that we like to use, right? And so let's just go ahead and dive into it. The first thing that I guess is kind of the key about Fibonacci levels is that they're essentially going to act as levels of support and resistance between your swing high and your swing low, right? So the first thing you want to do is identify a low, identify a high, and then you're going to plot your Fibonacci levels. That's going to give you about 5 levels of support and resistance in between that swing high and that swing low, right? And that'll make more sense once we get to the charts. But just basically, that's what you're looking for when you're tracing these Fibonacci levels. Nothing more than just multiple levels of support and resistance between your swing high and your swing low, right? And so we can get into what even Fibonacci levels are, right? And so Fibonacci levels are essentially derived from the Fibonacci sequence, right? And the Fibonacci sequence is basically a mathematical sequence of numbers in which a number equals the sum of the 2 previous numbers, right? And so it'll start at 0 and 1. The sum of 0 and 1 is 2. The sum of 1 and 1, no, that doesn't make sense.
0 and 1 is 1.
Right. So the sum of 0 and 1 is 1. The sum of 1 and 1 is 2. The sum of 1 and 2 is 3. 2 and 3 is 5, and so on and so forth, right? And that'll keep going all the way out. That's called the Fibonacci sequence, right? And so where do we get the Fibonacci retracement levels from? That is from the golden ratio, right? So if you take any number in the Fibonacci sequence, the ratio to the former number is generally going to be 1.618, right? And that's called the golden ratio, okay? And so what the golden ratio is, it's basically when you have, for example, in our Fibonacci sequence, 13 and 21, if you take 21 divided by 13, you should get 1.618. With Fibonacci retracements, we're taking that golden ratio and we're essentially taking it to different negative powers, right? So the golden ratio to the -1 power would be 0.618, which is our key fib level. The golden ratio to the -2 power would be 0.382, right? Which is another one of our key fib levels. the golden ratio to the negative third power would be 0.236, another one of our fib levels, right? So that's where our fib levels get derived from, is actually taking that golden ratio, which comes from the Fibonacci sequence, that golden ratio, raising that to different negative powers that will give you essentially, your different Fibonacci levels within your trend.
Yeah. And so another way to think about that, obviously that's the mathematical version, but if you want to think about it in terms of the actual sequence, right? One of the numbers in there, if you went down the line, you'd get to like 144, right? And so the number previous to that is 89. If you took that ratio of 144 to 89, that's your golden ratio, your 1618. Now the negative first would it's the reciprocal, right? So that would be 89 divided by 144. That's going to give you your 618 level, and so on. If you did it, you move down. If you went 55 with the number previous to 89, 55 divided by 144 is going to give you the 382 level. So that's how you can kind of think about it conceptually, going beyond the actual, mathematical representation, but that's where the levels come from. And then all that the Fibonacci retracements are doing is it's going to take your vertical distance of your move. So if you went and you plotted, this is one that me and Diamond used for obviously the start of the year. We had that initial strong sell-off in SPY, right? We went from 479.98 down to 420.76. What the levels are going to do is it's going to take that vertical distance, whatever that's going to be, like 59 point, whatever, 22. It's going to take that 59 and 22 and multiply it by 0.618, whatever that is. Like you're taking 61.8% of that move you had. That's going to give you your 618 level. And so that's all they're really doing. The horizontal distance, the time that it took to make that move is irrelevant. It's only calculating the vertical distance of the move and then applying these levels to it as you go down. So they're really nice in that regard, is after you have some kind of confirmation that, the trend is over. So if it was bullish, bearish, whatever, once you get a significant enough move where, you have conviction that you're getting a reversal, you can go ahead and plot these and almost have a forward looking indicator. Instead of, playing key levels in hindsight, like yesterday's high, pre-market high, you can have these looking forward and have these ready to go for the upcoming days and weeks. So you can kind of prepare yourself as you approach these levels for the reversal versus looking at levels that have played, in the past. You now have levels to expect reversals coming up in the future.
Yep, exactly. And so I think that this would be best described in a chart. So let's go ahead, dive into the chart examples and show you guys exactly how we would plot our fibs on different chart setups and how we would use those fibs to take trades intraday.
So obviously right here, I have the QQQ daily chart put up for you guys. I'm going to show you a bunch of different things here. One thing we didn't hit on earlier is the extension levels of the retracement tool. So obviously, the 0 level is going to be your start point. The 100 level is going to be the end of your trend, or vice versa if you're plotting it in reverse. Besides the levels you're going to get within the move, so obviously like your 618, your 382, 236, all those, you actually are going to get extension levels as well beyond the 100. So this is meaning after you've retraced the full move, you can now have extension levels to expect reversals after you complete the whole move. So I'll show you what I mean when I get into this, but typically we've back tested this and historically that golden ratio we spoke about at the very start, like where the whole Fibonacci retracement tool is derived from, that 1618, typically when you have any move in either direction and you kind of bounce off that 100 level, what you're typically looking for in a continuation of the move is going to be a bounce off the 50, which is obviously just 50% of the move, or the 618. Those are going to be your two key levels for continuation of the original move. So typically any stock will make a move in one direction, retrace 50 or 61% of that move, and then continue to the 1618, that golden ratio we spoke of, which is just going to be 61.8% of the move beyond the 100 level, like beyond a full retracement. That's typically what you're going to see then before, once you hit that 1618, that's when you're going to see your next leg down. And then you would just go ahead and convert your fibs then, I guess, from the 618 to the 1618 or whatever move you want to make it. So I'll go ahead here as I'm sharing screen. I'll just show you exactly what I mean. So when I'm looking at this chart, right, I have this on the daily. This is typically where I like to plot mine, either on a daily or a 4-hour or a 2-hour. I never use these intraday. I've seen a lot of traders use them with success on like a 5-minute or something. You take a move from the open to say like afternoon hours when volume decreases or lunchtime and you start getting a reversal in either direction. You can go ahead and plot those and they do work intraday. I don't like using them that way though. I feel like it's just too much to handle when you're in the midst of trading, looking at strikes, trying to take a trade. So this is kind of how I like to use them. And again, it's going to give you way too tight of levels. I like to hold a trade for a couple hours usually. I don't really want to be scalping trades between like $1 in between levels, but just go into the chart here. So when I look at this, what you want to do is take a clear high and a clear low, typically of one direction, right? So when I look at this chart, while this was technically the all-time high of QQQ, in my opinion, the real bearish flow didn't start until December 28th here. Like we came off of all-time highs in November here. We did set a low. So a lot of traders will look at this and just go high to low. Like you would take the all-time high, you would go to the recent low, and that's what you would plot. You can do it that way. There's really nothing wrong with it. But in my opinion, I really want to go from where the distinct trend starts and ends. And in my opinion, the real bearishness that we saw started on the 28th here at 404 versus 408. And so you can go ahead and edit these, make them more accurate when you get in here. But what I would do is start that there and then go ahead to the double bottom we had here right around 317. And what do you know? We had this aggressive bear market rally here to the upside, retraced all the way to the 618 right here at 371 before, now we're seeing continued downside, right? You're going to go ahead and find the drawing tool down here. It looks like a percent sign, right? These are your drawing tools. It's going to be defaulted on the mouse here, but this is where you're going to go ahead. You're going to find your timestamp, price levels, all this stuff, rectangles, retracement channels. It's going to be this percent one right here. And there are other tools you can mess around with, Fibonacci extensions, time series ratios. We'll save those for other videos, but this is going to be your retracement tool right here. And then what I like to do, I want to make these as accurate as possible. So if I'm plotting from this high to this low on the day, I'm going to go and look at the actual lows and highs. So this low was 317.45. This high was 405.58. So I was off by a penny here, a little bit more on the other one, right? So I'm going to go ahead and edit these, make them as accurate as possible. Now you can see the 618 here was 371.3. High of day was 371.83. So 50 cents off, right? Because I'm plotting this on a daily time frame. When I'm looking at this on a daily chart, you can see that it looked like really clear, resistance before reversal. If you were playing this intraday, I trade intraday on the 5-minute, Diamond does as well. Like a 50-cent move is not really that tight, right? If you were going to go ahead and plot these on a 1 hour, they're going to respect the levels more accurately than on a daily time frame like this, 5-minute, even more so. So just keep that in mind, right? If you kind of need to scope out, because if you saw this 50-cent break intraday, you might be thinking we're breaking through to the next level. When you go ahead and look at this on the daily chart, you can clearly see this acted as resistance before getting the next leg down. And then also what I wanted to show is those extension levels I was hitting on. Now, this is how you would chart it to get your percentages correct, right? This is clearly your 61.8% retracement. That is where we rejected. That's what you're looking for before continuation to the downside. However, this puts those extension levels I was talking about to the upside here. And you would want these to the downside. If I'm playing the 618 retracement and I'm trying to play the continuation then to the, the full retracement and beyond, I want my levels to the downside. So what I typically do when I play these is I swap these. And obviously the prices are going to be a little off now, but you're going to get the gist, right? What this is going to do is put my 382 where the actual 618 is. So you just have to keep that in your mind. While this says 38.2%, they're just reciprocals. 61.8 and 38.2 obviously add up to 1. These are going to be the exact same levels, price point wise. They're just going to be reflected differently in terms of percent retracement. But what this then does is you can clearly see we had the 618 rejection there. We're down below the 786 here. So odds are, I'm not going to put a time frame on this, but I'd be looking for this to retest 317. If this breaks, now I have extension levels to the downside, which is how I like to play these. And so I would be targeting, obviously this is, a long shot on a more macro time frame on the daily. But the golden ratio, that 1.618, then puts that down here at 263.16.
Right. So a couple of things. First of all, exactly what you were hitting on, where like when you have the numbers on the left, when you have your 382 where your 618 normally is, or vice versa, or your 786 where your 236 normally is, like I don't think that where the numbers matter. I feel like people get hung up on, oh, this should be my 618, but it says 382. Did I do this wrong? Like, I don't think that really matters. It's more so the price point that matters, right? As long as you understand what you're looking for, right? When you do your fibs, you're looking for what percentage of the move has been retraced, right? So if we made a move in QQQ from 404 to 317, when we get up to 370, 371, we have retraced 61.8% of that original move to the downside, right? So that's all the Fibonacci retracement is telling you. What percentage of the move that we just made are we now retracing, right? And so once we have retraced 61.8% of the previous move, we're looking for a continuation of that original trend, right? So if the original trend was down, like it is in this example, when we bounce up and we've retraced 61.8% of that move, we're now looking for a continuation of that move that we just got to the downside, which you can see on this chart is playing out. Once we got to the 618, which is, I know here is visually the 382, but once we got to the 618, once we retraced 61.8% of the move, we began to come back down, and now we are essentially moving in the same direction, right? The same direction of the original trend that we are retracing. Okay. And so that's the entire goal there. And then the second point that I wanted to hit on is you saw how Mander essentially said, okay, I see that this original high, the all-time high that was set back in November is at what is that? 408.71, right? Instead of drawing his fib from there, he chose the most recent high that really started the move. That's how I'm using my fibs the exact same way, right? I want to see where did the move begin, right? It's not necessarily what is the highest point and the lowest point of the last 6 months or whatever. I'm looking at where did this move begin so that I know, okay, this is the real move that we've just had, right? This is the most significant recent trend. I want to see us retracing that trend, right? I don't want to choose the wrong trend. And so one of the ways that I like to choose the right trend is exactly like Mander said. Even though we set an all-time high in November, you can see we chopped around there for a little bit, created that W formation, kind of got a double top off of 404, double top off the 400s, and now we're coming down. That January high serves as a much better high for your Fibonacci retracements because that's really where the move began. Even though the highest high isn't necessarily that high is the one that gave us 300s, right? And so I think that that's really how you want to approach these.
Yeah, and the one thing I wanted to hit on that you mentioned is to not get hung up on the percents here. You can kind of see how I have mine color coded. I have the 236 and the 786 in black. This isn't to say they're not important, but they're not my main levels, right? These three are your main levels for strong, violent moves off of them and legitimate trend reversal. So that's why I have these ones in white, the others in black. I don't even really look at, what percent is what when I'm trading these intraday. Because obviously if you come in a 5 minute, if I scroll up here, right, like this is what I'm seeing. I'm not looking at these saying, oh, this is, the 382 or the 618. Like I'm going to get really short off here. What I really do with these is I just trade level to level using the EMA strategy that me and Diamond have already done a video on. So I could really care less, what percents they are when I'm trading these intraday. It'd be different if you're taking like a long future short or something like that, where you're looking to hold on to something. But the way we typically trade with, day trading, maybe swinging for a day or two, right? I'm really just trading level to level using my EMAs. And then once I get to my next price point being the next fib that I'm, if we were trading at 370, my EMAs are telling me bearish, I'm trading to 360 then. If 360 breaks, then I'm going to target 350. If we get a bounce there, now I'm playing back, right? I'm just going level to level using the EMA strategy that we've already covered. So the percents, the actual, what they are really irrelevant to me. I don't even look at them when I'm using these intraday. And I did want to show there's 1,000,001 ways to use these, right? So this is what I would do on a daily chart, right? And you can see how well it played to the 618. That's not the only way to do this. As I was saying earlier, you can kind of tailor this to whatever style trader you are. So here was another one we were looking at. If I go ahead and flip this, this was another stronger trend we had. Maybe this will show up on I'll pull this up on the 90-day, right? We got a bounce off lows here. This was your Ukraine invasion. We got a really strong bounce off lows into a continued strong bearish move that basically double bottomed at this 317 level, right? So if you wanted to look at this on a smaller time frame, this was still a one directional trend, right? You had your high here that pretty much went directionally straight into your lows here, you could have gone ahead and plotted that. And then again, as I said, once you make the full retracement, you get this break of the original high here. You're targeting that 1618, which again, look at that 371. We set top, right? Then you could go ahead. We just made that move. You could go ahead and then say, all right, we just hit the 1618. I'm expecting a leg down. Let me go ahead and edit this to something like that, right? And you can see again how perfectly this played out. We came down off this move, found original support at the 618 here. It's labeled as the 382. Bounced up, broke the 50 by a little bit, came down, had 3 tests here of this 618 before it finally broke today. And so we'll see kind of how this plays out in the next coming days. But just to show you, there's a million and one ways to use these as long as you're using them right in concept. You're taking a directional low and a directional high in one streamed movement, trying to avoid chop as much as possible, but you can really take on any time frame, any high, any low that moved in pretty much one direction, and go ahead and get your levels for that. As I just showed you, they work in a million and one ways, and they respected levels in all 3 times that I did them.
Yep. I'll do one on SPY. You just did QQQ, right?
Yeah.
I'll do one on SPY. Stop share and I'll jump in.
Trying to find where it just went. Oh, it's up here.
You see Trend Spider?
Yep.
Cool. Which one do I want to do?
Yours looks so much sicker than mine. How'd you make everything blue?
What do you mean? All this shit?
Yeah.
I don't know. I don't know how Trend Spider works.
Mine doesn't look like that.
This fucking thing keeps popping up. I don't know what to do about it. I don't want them to think I'm poor.
You know what's really pissing me off? You ever draw something and you have to edit properties on it?
Yeah.
Dude, it drives me fucking bananas. I don't know if I'm doing it wrong. Every time I do it, I hit control and I click on it to do the drop menu.
Mm-hmm.
Like, yeah, plot something and then go ahead and edit it. I want to see how it looks like on yours. Dude, mine doesn't let me do that. Like, the only way I can get my mouse on there is if I have it held pressed in, and then all I do is drag my drawing away from where I originally had it. It drives me fucking bananas.
That doesn't make any sense. Yeah, this platform's got some shit to work. This thing up here, this is what I'm saying. I don't know like what to do about that.
We have failed to save your workspace.
I really don't want to restart this. I can't.
Nah, screw that. It's fine. It's fine.
I can't.
Computer's probably just low on RAM, so it's not saving it.
Too much bang, bros.
Yeah.
All right. This is the one I'm going to use. I'll talk about this one. All right. So the next chart that I want to go over here is a chart of SPY, right? And I want to show you guys an example of the Fibonacci retracements that I had back in January after that initial sell-off, and kind of how they were enabled me and actually Mander as well to take a really profitable trade towards the end of February there. And so imagine, this is January, this is the January move, this is the January low on the 24th. And so around this time, around the turn of the month, February 1st, imagine that none of this price action is here, right? So we're only focusing on really this price action, this move that we just got down significantly. And so I looked at this daily chart. Again, none of this is here. I'm just looking at this daily chart. The way that I would apply my fibs is essentially here's my swing high, right? And here's my swing low. And the reason that I would say that this is different from the QQQ example where we chose basically this like a different high as kind of my swing high is because this really was the beginning of the downward move, whereas QQQ's top was over here and then it consolidated for a little bit, and then we took the regional high in this general area actually from the same day and made that our high of the retracement. I think that for this reason, SPY set a new high and then it really did dump off from here, tried to retrace, couldn't do it. And I'm sure actually if we check the retracements, the fibs on this, pretty clean rejection at the 618. But regardless, what I would have done, right, what I did in this, general time frame, the turn of the month, is I went from January 4th, the highs here, and I drew my fibs down to this low that we had set at 420, right? And so now I've got, again, I identify my swing high and my swing low. I've now got 5 different levels of support and resistance within my swing high and swing low where the price may potentially reverse, right? And you see that we actually got a 382 rejection right here pretty fairly early. But this rejection up here was really the one that we were paying attention to, right? We want to see a move retrace 61.8%. And now I'm looking for a continuation of that original trend, right? And so when we retrace this move, when we do this move, our 618 retracement is up here at 457.4. And you can see that we actually rejected that level 3 different times, 1, 2, and 3, right? And on this third day, Mander and I both actually shorted this 457 level after recognizing that it was a rejection. We saw it break under the EMAs. We said, you know what, that's a third rejection of this key level at 618. Let's take puts. And as you can see, the stock wound up flushing for the next 3 days. Those puts went over 1,000%. And I think, that's really the embodiment of how you want to trade the strategy, right? It's not so much blindly, okay, we're at the 618, I'm going to short, which by the way would have worked both times had you did it, right? But that's really not how you want to use it. You want to use it more so, this is going to be a key level of resistance for me. Okay, so after I see multiple tests, after I get some confirmation, now I can feel a little bit more confident. Okay, this is actually going to act as a level of resistance for me, and I can effectively take a short off of this level. And that's exactly what we did in this scenario. And then I believe
that's perfect. Oh, sorry.
Yeah, no, go ahead.
I was going to say that's perfect. I remember this like it was yesterday because I was on Twitter, sounded like a broken record. I was harping at shorting this 457.40 level initially. So the gaps you're seeing there off that first test, this was earnings week. So Apple beat earnings, gapped us up to there, I believe, or maybe no, that was Google beat earnings and announced the stock split. We gapped up to the 457.40 level. Very next day, Facebook came out and got obliterated. That gapped us back down. And then the final test that brought us back up was the Amazon beat. Right. But after that second test, so I had set it off the first test, really just got lucky there with Facebook missing earnings. But after the second test, and then finally the disgusting candle that you're currently on, after that third test, it tested it right at the open. It squeezed really hard. And that's right when me and Diamond got short off that third test and reject. And that was honestly one of our better trades of the entire year. 10 bags on those. I believe was that a Thursday? We swung them into Friday.
Thursday, Friday. Yeah. Thursday here. Yeah. Friday here.
Yeah. Yeah. So, I mean, you can see how those went by Friday into close the next day. Really, really violent move off that. And that's what you're looking for, right? That's why I'm not too keen on the 236 and the 786. It's not that they don't work. Like you will see moves off them, but you're not going to get a move like that. You want really violent moves off these, especially the 618, as you can see, was really key there.
Right. Another thing I want to point out very quickly is that, so the way that I usually draw my fibs, and I've gotten in a habit of doing it from high to low, just regardless of what the move is. But realistically, the way that you should do it, I believe, is have your 0% at the start of the move, right? Have your 0% at the start of the move. Have your 100% at the bottom of the move. Because like Mander said initially, like that's how you want to get your extension levels to the downside. Like you don't get these extension levels to the downside unless you can have your 0 at the start of the move. And even if you're playing a move up, right, then the start of your move would still be down here at the lows, high of the move at the highs, and then you can plot it like that, right? So I think in this scenario, that's kind of how you want to play it. Here's another perfect example of how this strategy would kind of play out. So we've got our low here. It's a little bit more accurate. Our low there, our high there. You identify a swing low, a swing high. You're playing it to the downside, right? So you want to see how much of this move to the upside has retraced. When we get down here to the 3.382, which is essentially the 618, you know that you've retraced 61.8% of this move. Hammer candle off of the 618, that to me is bullish. We get a gap up next day, right? Like that's the type of moves that I'm looking for when I'm taking this when I'm using this strategy, right? And so the last thing that I wanted to cover for this chart in particular is kind of how I would approach it based off of where we're currently trading, right? So we're currently kind of in a situation where it looks like chop, right? Where we're consolidating. There's not much of a clear direction, right? We've got lower lows, higher highs. Looks like we're well on our way to lower lows, right? Who knows at this point? But it looks more or less like chop. And so what I think in reality, the best way to plot the current fibs and what I've probably got right now would be from these lows here to these highs. I would plot my fibs in this fashion, and then I would go essentially into smaller time frames and play in between these moves with my EMAs, right? That's essentially what my goal is when I'm trading with fibs, right? And so today, how did that work out for us? I'm gonna go to the 5 minute. All right, so how we would use these on the 5 minute chart, right? And so earlier in the day, we were both able to get into puts. Did you take SPY? I believe you did.
I took SPY.
I was in QQQ. But we had essentially a situation where I got short right around here, right on the CMA reject. And like Mander said, when you're trading with fibs, it's not solely, all right, we bounce off a fib, I'm going to play to the next fib. How I use them is I see that I have an EMA rejection here off the 21. That's my entry rule. And so that's how I got into this trade. When in reality, I'm playing to this key level here on my fib, right? So whatever this is, it looks like 440, 4.4. That's the key level that I'm playing to off of this move, right? So I've got my fib rejection here. I'm playing from fib to fib. I see that we're below the 8 EMA is below the 21 EMA, which is below VWAP. All three of those things to me shows me a short-term bearish trend. So I would take this trade to the downside and I would target essentially this 4.3 level, right? And that's exactly what we did today. We took this trade. You can scale out basically when you get to your fib. And then if you get a blessing like we got today, it'll keep falling right to the next fib. Okay. But if it doesn't, you've already got what, by this point, probably 50-60% profit. And that's on a 1 day expiration. I mean, that's a solid move. And that's exactly how, I'm trying to play these fibs, is from in between, from level to level, using my EMA strategy.
Yep. That was exactly the trade I took. I got in there at 11:05. If you can find that on the timestamp, exactly the top of that candle on the crossover and then the EMA test there.
Yep.
And those gave me 100% on the 444s by the gap fill there. So not even at the fib level yet.
Yeah. To hear.
So another, right. You basically played to your next price target being the next fib, scaled out at it over 100% risk-free trade. Now I had the confidence to hold them because they were risk-free and we fell all the way to the very next fib and even below. So those went over 6 bags on a 1 DTE, which is absolutely insane.
Another thing I wanted to point out on this chart, I don't know if we're going to get it on the 5 minute chart. Let's maybe go to a 15 minute. But this 444 level has been significant resistance over the last, what is this, April 11th? Today's the 21st. So over the last 10 days, really, this, which I believe is the 618 retracement, if I'm not mistaken, if I check the daily chart, that 444 is... Yeah, that 444 is my 382 level. And so when I go into the 15-minute chart, you can see that we've had resistance at this level for a week, right? Resistance, using my fib levels. Each time I can either take a short here, if that's what my EMAs are telling me, if that's what my flow is telling me, right? So now I'm stacking levels of conviction. You could have shorted this any of the 3 times if you have additional levels of conviction and take that trade, right? And I believe that this is a trade that we took as well. This is the open. You see a strong candle at the open on the 15-minute come up after a gap down, right? Or after basically opening flat, running to your fib level at 444 and then creating ultimately an inverted hammer closing below your EMA. Like that's a money short ad right there. Like, and it's not, I'm taking a short just because there's a fib. I'm using additional levels of conviction to kind of get into this trade. And so, that's really how we try and use them intraday.
All right, cool. So the last thing I wanted to show you guys while I got you here, this is one of my favorite things to do with these Fibonacci retracement tools is do an overlap of the two. This is actually currently what I've been trading off of. Although it's not the recent trends, as you can see, the levels have still been playing. This is one thing I wanted to hit on too. I have no idea where I found this. I found this years ago just through my deep dive of fib retracements. I was told and I read somewhere to use the 128 as one of the extensions in addition to the 1618. I think if you plot them on TrendSpider, it auto does like the 1236, the 1382, like it just adds the other retracements on top of one. But this is another one I found really a lot of success with besides the 1618 is this 128. So you're gonna have to custom input this into your fib tool. So what I do here, you can just add it. You hit add curve right there and you just type it in. Then you can save it as a default. So every time you go ahead and draw them, it'll automatically pop up there for you. But as you can see, right, this worked out really perfectly. We had our initial January sell-off. We got the bounce back to the 618. So what I like to do is I'll do an overlap of the two. So I have my original sell, and then I overlapped a recent retracement, which was the retracement or the trend back to the 618. And then I overlap them. As you can see, you get overlapping levels at a lot of key supports. So the 236 overlaps with the 618 here. The 382 overlaps with the other 382, et cetera. As you can see, they play out when you get to them. If you have an overlapping fib level on two of them, it's just going to be that much stronger of support or resistance, whichever way you're kind of playing it. And you can see once we set lower lows, where did we get our bounce was right at the 128. The 128 here was at 410.36, and these are accurate to the cent. I did this from the 420.76 low to the February 9th high, because that next day is really where the downtrend started. So this, in my opinion, was where the uptrend ended, right? So that's where I did that too. Low of this day where we opened pretty much, and then just absolutely exploded off of. Low of this day was 410.64, level was 410.36. So again, off by 30 cents, right? And then we absolutely rallied off of that. This was really the only one that kind of broke. This ended up breaking recently on the 29th of March. This broke the previous high there. That was the only thing I didn't have a level for. But then as you can see, if I pull this up on a 5-minute, the levels have still been really accurate, or even better, maybe do this on like a 1 hour. You can see the levels have still been really accurate. So once we kind of fell off that recent bull rally high, we fell down to, we consolidated first at, the 618 and the 0 there. Fell from level to level, got a bounce off the next level, retested, fell under that one. So now you've rejected this level twice. You kind of consolidated, broke, retest, go. Where do we fall? We fall to the very next level under that. Then we get a bounce off of that level to the previous one, break that, get a fall to the level under it, bounce off this level up to the previous one, fall under that, right? And so you just play level to level off these things. And as you can see, you're like, you break one, get a bounce to retest the previous, and then you usually go 2 legs down, bounce off of that to the previous, 2 legs down. And that's really how I've been playing this, right? And so this one wasn't quite exact. This one was off by like 60 cents at the 618 there. We got that bounce off pretty much triple topped here at this little supply zone. So that's kind of how I like to look at these, right? It pretty much, instead of playing to an exact price point, it's going to create a little zone for you, which I think is better, because a lot of traders will get faked out if the level breaks by 20, 25 cents. When realistically, if you're charting these on like a daily time frame, like I said at the start of the video, they're not going to be accurate to the penny like that. And then you just got yourself trapped by playing the fake break of it. So I like these zones a lot better, because you won't rush an entry. You'll wait to see a reject of the zone before going short, which, as you can see, is exactly what we've been getting here. And I'll show you exactly on the 5-minute how this played out today. You got a perfect. Initially, you can see we got this bounce, right? We consolidated in the little zone.
That's yesterday.
Yeah. Yesterday. Yeah. And then got a leg up almost, into the zone here. I'll delete this for a second so you can see. This was your next zone above, right? Pretty much a dollar price point where you would expect reversal, exactly where we got into today, and then rejected back down, got our quite literally first leg of consolidation there at the fib level, and then pretty much broke hook and go.
Right.
And so this would have been another great entry had you missed the initial move, right? We get this break under it. So as we approached here, I would have been waiting to see, are we going to bounce off of here? This is also that 4450 level in SPX that I was referencing. Are we going to bounce off of this and see upside, or is this going to break? Once it broke, I'm then waiting for a retest to enter and play for the next leg down.
Even if you go back to that one this morning, right? So if you have your 450 psych level kind of planted, right? If you draw a line at 450 and you're looking at it on like a more macro time frame, so you're looking at like a 30-minute chart, and you say, okay, I've got 2 levels of fib resistance and a 450 in this zone. right? On a 30-minute chart, that's a clear rejection. You have 3 levels of resistance. You get a inverted hammer off of that level. Like that's kind of like where my thought process goes, as opposed to this close right above my fib, I'm going to get in calls for a break to the next level, right? Like, no, if you go out to a 30-minute time frame on this, that's what I mean, is that you can see that first candle clearly has selling pressure. You didn't necessarily reject to the cent off of the fib, but you're in between 2 significant fibs and you reject up for 450. That's 3 levels of resistance. You get a candle with some pretty significant selling pressure towards the top, and you know that you've got a gap to fill down. Like that's 3 levels already without even checking the flow on, okay, maybe I want to play this to the downside for this gap fill and to my next fib level, right? Like that's kind of how the thought process would work there. That's how it did work.
Exactly. And again, with these, like the zones between levels, you can just think about this as a lot of selling pressure is going to come in as you go and test these zones. As you can see, right, if I draw just like a rectangle in here, this is your zone that you're expecting reversal. You can see this is pretty much, we rejected the first time, we gap down. The very next day, we get back up here, we get into the zone, rejection, right? This is now your 3rd test of this supply zone. So on top of the 450 kind of psych level, that's what you should have had in mind. Regardless, like we trade on the 5-minute, but you're then victim to a lot of noise. And so what looks like a really strong open in the first couple minutes, and Apple was rallying this, that, and the other, you kind of just have to sit back. That's why I don't really trade the open. You just got to sit back. And if had you look at this on like a farther out time frame, you can see clearly a lot of selling pressure up in this region. I really just never looked back. Just one of the stronger trend days we've seen recently, straight through 3 levels here. Or 2 levels, we'll see once we get a test. So this is really where I'm expecting next test here will be somewhere between this 347, 345, 6 region. That breaks. There's your downside here. That's why, again, I like them. You have levels already looking forward.
Right. Let's hit an intraday example and get out of here.
Just before we finish up here, we want to do an intraday example just to show you guys you can do these. I know a lot of traders do them. I personally think this is kind of how algos day trade them in the intraday. Obviously, I think in your lunch hours, it's something like 75% of the actual volume is algorithmic computer trading. Pretty much all of, Wall Street, wealth managers, everyone physically trading usually trades the open and the close. Pretty much everything in the middle of the day is AI and algorithms. And so one way to be a step ahead is to just do what the algos do, right? And so here's a way you can do that. They're using intraday fibs for pretty much buy and sell triggers. And here's a great example of that. If you take, this was 412, this was Tuesday. What you want to do is, like I was saying earlier, you get your opening move and then you retrace, right? And so you could take this high and then this low here as you started to see a bounce. So once we started, this was clearly your initial trend, right? We got the move at the open, then we trended down. As you started to see these candles start ticking up, you could real quick throw that on. And as you can see, I don't even have to really zoom in. Like you can see this perfect 618 rejection before continuing lower lows. And then what I would have liked to do, I wanted to show it that way so you could see that it is the 618 level, but I would have plotted this backwards as I was doing earlier. This would have been my mindset. It looks like we definitely set lower. We went lower than the 618 or the 1618, but this is how I would have done this. Played off the 618 rejection, playing to the 1618. So I would have gotten in here at 444-ish, 444.40, playing down to 440 at the 1618 as my price target. That would have been a great intraday trade if you took 440.
You also see that perfect 128 bounce, right? Like that's where we, once you break that low a day, that 128, find support, retest low a day, rejects. I bet you that long wick candle was probably at an EMA. So in that example intraday, you've got a bounce off your 128, you're retesting low a day. You've got a fib, a fib rejection and an EMA rejection though. Double down with a gap to fill to the downside, 3 levels of conviction alone, check flow. It's bearish, 4 levels of conviction. Like that's kind of how you should be thinking about, entering these trades with your fibs.
Yeah, this one really is textbook. This is a great example. You can see we got the initial rejection off the 618, fell to the 382, bounce off the 382 to the 50, kind of consolidate in this region. Finally break through the 382, same exact thing, break hook, retest the level, reject it. All the way back down, we break through the full retracement at the 100 level, get a bounce off the 128, come back and retest, consolidate again before seeing our next leg down. This went straight through the 1618. Obviously this went a lot lower, but even if you just played 2 here, that's a 4.5 point move, and you got in these at midday. So that's a 4.5 point move in your favor in just the afternoon hours. That's definitely 100% plus trade.
Easy. All right. I think that's good. I feel like we have a lot. Let's wrap.
Let's wrap. That was a good one.
Take it off a screen share. I'll take us home. All right, so some key points from today, right? The first one is that you're going to use fibs in conjunction with additional tools, right? Whether it's your EMAs, whether it's other key levels of support and resistance, whether it's options flow, you're going to use Fibonacci retracements in addition with other levels of conviction to take directional trades, right? And secondly, I mean, people are constantly asking about the time frame of these fibs, and I feel like you can use them intraday, but again, you're going to have A, tighter levels, and B, a smaller time frame to recognize your high and your low and then play in between them. Doesn't mean it's impossible, but personally, we like to use them on the daily to kind of get more macro levels of support and resistance that we can play in between on the 5-minute, 10-minute, 15-minute using our EMA strategy, right? And so they just act as levels that we're basically playing in between based off of what is the news of that day, what do my EMAs look like, what's the options flow, right? And now I have key levels of support and resistance where I can add and then take profit. And so that's more or less the gist of what we're doing.
All right, guys, if this helped you out, I know a lot of you guys were requesting this video. Please give it a like and subscribe to our YouTube. You know where to find us in the Discord, live trading every single day. Follow all our Twitters if you haven't, and Kane-capital.com if you want to shop any merch.
Absolutely. Be good, guys.